Hey guys, welcome back to Honey Money SG, and in this channel we are all about building financial knowledge, share money saving hacks, and also help you lead a fulfilling quality of life. So I finally had something good to say about Syfe, you know, right? After I've commented about their performance and the reviews of them for my past few Syfe videos, I thought that there is something really good that I should share with you guys why you all should use Syfe. And maybe this is a good reason for you all to use Syfe instead of using your traditional cheap brokers like Tiger or Mumu brokers or even interactive brokers, right? And folks, you know that I put my money where my mouth is, and I really have skin in the game so that it can help you consider whether you want to invest in Syfe as well. But first, disclaimer, right? This video is not sponsored by Syfe or any financial institution. It's really my own sharing and my own portfolio, so you can be rest assured that this is really my true and honest opinion and not a biased one. But you have to know that this is really not financial advice, right? Because I'm just sharing what am I doing. Whether you want to do it or not, it's really entirely up to your own decision. So with that out of the way, let's go to my previous Syfe portfolio update and compare it to my current portfolio for Syfe update. Let's go. Alright, so my previous Syfe performance update was in November 2021, so that's just 1 month ago, and you know that I now have 3 portfolios with me, which is firstly my Syfe Select Custom portfolio, where I actually allocated equally into 3 ETFs, right, which is the VWRA, QQQ, and the CSPX. And at that time, I actually gained like $121, so that represents like around 5% plus in terms of absolute returns. And then for my equity 100, you all know that I only kept my portfolio to around $1,000 as the base, right? So I gained like $59, which represents around 5.9% absolute gain on the equity 100 portfolio that time in November. And lastly, it will be the REITS Plus portfolio, which a lot of you actually sign up Syfe for. So for that portfolio, I actually gained 0.8% last month. So that represents like $8. So far, November has been a pretty good month for Syfe, right? All of my portfolios were positive. But now in December, let me bring you to my Syfe performance portfolio and see how is it doing right now. Let's go. Alright guys, we are back at my Syfe portfolio, so let's start off with Diamond Hands, right? So you know Diamond Hands is the name of my Select Custom portfolio, and so far I have invested around 2.6k Singapore dollars. So what I did is like $100 weekly, right? There's a dollar cost average, so I do this like weekly $100 just so to effectively dollar cost average this. And so far my cumulative return on my portfolio return has been $131. So 2600 plus 131, you'll get to 2731. So that represents like 8% time weighted return. But in terms of absolute return, right, we will take the number 131 divided by 2600, and that represents a 5% return. So 5% return in like a few months, not bad, right? I actually started this portfolio since October. So that is like 2 months already from now. 2 months you get 5%, not bad, right? And that's because in October we really had quite a bull market run in recovery of our US index and the tech stocks. But I guess December didn't start off very well, right? We just undergone another correction because of inflation fears and Omicron variant. So that's just really unfortunate for my Syfe portfolio as well. But I guess if you dollar cost average for the long term, then this kind of small fluctuations is kind of normal, and you gotta accept that market is really unpredictable and can really go both ways. But so far, as long as my Syfe Select Custom portfolio or my Diamond Hands portfolio has returned positive, then I'm really satisfied with the performance, right? After all, it's really handpicked by me. My Syfe Select Custom portfolio has gained 5% over 2 months. So the next Syfe portfolio, then you will see how far has it performed for my Diamond Hands. So let's go on to my next portfolio, which is Equity 100. So you guys know I started Syfe with Equity 100 as well, but after that portfolio adjustment, I actually reduced my portfolio to $1,000. And so far it has gained me $48.61. So not bad, right? For around 4.9% return after I did a portfolio reshuffling 2 months back. 4.9% is quite comparable to my Syfe Select Custom portfolios. And I think the biggest reason is because it has those emerging market equity funds, right? And even like China equity markets. So once you're exposed to those kind of China exposure, it's really just high risk, high return. And if you look at the composition, this is what it really consists of, right? 20% QQQ and 17% on the Invesco S&P 500 equal weight ETF, and then 14% on CSPX, 10% on China, 9% on the consumer staples. So really QQQ, equal weight and S&P 500 is really carrying this equity 100 portfolio. Whereas for like China ETF, right, this kind of KWEB China ETF as well as the MSCI China ETF most likely is dragging this equity 100 portfolio downwards. Likewise for the emerging markets ETF, but that's just a very small portion, right? And they also keep like 0.9% worth of cash just to pay your management fees in case. Yeah, so that's it for my equity 100. It's still positive and it has also enjoyed that October bull run, and then in late November and December it also corrected quite a few percent because of the entire market correction as well. So lastly, I'm going to go to my REITs Plus portfolio, and you guys know I actually talk a lot on this REITs portfolio in my previous Syfe portfolio videos, right? So because I think the biggest reason is the referral fee bonuses are actually paid out in Syfe, especially they are all channeled towards my REITs portfolio. So every time I have to do a withdrawal just so that it could be an apple to apple comparison, right? So if I look at this filter cup and I put in my withdrawal versus my bonus, this is what I do every time. When I get a referral bonus, I will actually withdraw it. Okay, I get $20, I withdraw $20, I get $10, I withdraw $10. So that's just how I do it, because I really want to compare like what is the entire return of this REITs Plus portfolio. And you guys know from my previous Syfe portfolio video that I actually reduced my portfolio to $1,000, right? So anything below $1,000 is actually negative for me. So that means I already lost like $18 on this REITs Plus portfolio. Previously was a 0.8% gain, bear in mind. So REITs have not been doing well for these past few months. In fact, REIT has not been doing well for this past year, right? The whole year of 2021 has been a really bad year for REITs. We see the strong REITs like Mapletree Industrial Trust, Keppel DC REIT really falling back to the price point where they are more considered value stocks. Because I think in year 2020, they kind of overrun their value, right? But the thing I don't like about REIT Plus is they didn't put a lot of focus in Parkway Life REIT. Because Parkway Life REIT is actually one of my favorite REIT. If you all watch my REIT portfolio video, right, Parkway Life REIT is really a big allocation to that. And then in their REIT Plus portfolio, they actually put like a very small allocation in Parkway Life REIT. I don't even know how much percent. Yeah, 2.41%, mind you, right? My favorite REIT, you all put at 2.41%. And who is your largest REIT? CICT. I don't even have CICT in my main REIT portfolio. But I guess that's just how it works, right? It's kind of the diversification from my own personal REITs portfolio. Which reminds me, I need to do a REIT portfolio update by the year end to give you guys the dividend update as well as my portfolio updates from there. But if you guys really don't understand all these REIT terms and REIT performance stuff, then maybe just try a bit of money inside REIT Plus, understand some of the terms and terminologies, then maybe go and set up your own REIT portfolio. That's a good option as well. So don't mind this portfolio return and this invested amount, because they actually took out your withdrawal amounts when you withdraw from the portfolio. So what I did is I actually just withdraw my referral bonuses, and then they just deduct from my invested amount, which is not accurate. So my accurate amount is really an $18 of loss. It's not a gain of $289. That's a lie. Like I mentioned a lot of times in my Syfe portfolio performance videos. So don't just take it as face value. You really need to know where are your referral bonuses going to. And don't be fooled by the way Syfe calculate referral bonuses as part of your investment returns, because that's just wrong. So with that, these are my 3 Syfe portfolio performance update. My diamond hands has gained around 5%. My equity 100 has also gained around 5% as well. My REIT Plus has lost $18, so that's about 2%. So we could really see that the US markets is really pulling up my Syfe portfolio, right, rather than my REIT Plus portfolio in the SGX. So y'all go and do your own research and see which portfolio is great for you. And if you found my sharing useful, do help me comment a thank you in the comment section below. I'll greatly appreciate it, and let's get back to the video. Alright guys, welcome back. So you could see that this time my Syfe, actually some of them are doing good, some of them doing not so good, especially on the REIT Plus side, right? But what you could really learn from this is that sometimes maybe if you select your own custom portfolio and the ETFs are good enough, right, they can really carry your Syfe performance instead of going for the Syfe default portfolios like what they given you in Equity 100 or REITs Plus. But of course, if you choose those high risk, high return ETFs like those ARK investments, right, ARK K, ARK G, ARK F, ARK W, then you probably won't be sitting on a very good performance in Syfe, because in actual terms, ARK has really underperformed the market for year 2021, and that is a fact. So really why you should invest with Syfe is really very simple. If you are like a small time investor, or if you want to do like small DCA amounts like me, right, I just do like $100 every month, then I don't think it makes sense to go to traditional brokers, because in terms of the percentage commission as well as the FX conversion, right, you have to pay like a small fee every time you actually do a foreign currency transaction from SGD to USD. And at the same time, if you actually use like small transactions, your cost of commission at the terms of percentage, right, will be really high. So unless you are like doing a lump sum or a large amount every month, then I feel that maybe going through Syfe may be good for these small time investors investing like $100 to $200 per month or per week per transaction. Of course, as your portfolio grows larger and larger, right, you have to actually understand the fact that the management fees of Syfe will actually increase over time, whether you make money or lose money on their Syfe portfolios, because 0.65% is guaranteed, but your returns are not guaranteed. So all these costs and fees are really more important than you think, right? Because it will really eat into your returns if your portfolio grows really large. So have a good thought, right, whether Syfe is really suitable for you based on your investment style. If you are trying to build a lump sum investment, then most probably Syfe won't be for you. But if you want to DCA like small amounts, let's say you are an NS man or you're a student, right, you can only afford to invest like $100, $200 every month, then really Syfe is really good for you compared to those traditional brokers, right? And I'm going to be really objective here. Whether you make money on Syfe or not really depends on what portfolio you have chosen. Now, you have followed my ETF portfolio strategy, which is 33% QQQ, 33% CSPX, and 33% VWRA. I don't think you'll go that bad, right? Because all these are actually market returns based on the technology sector, the S&P 500 index, and the MSCI World Index. So I don't think you'll go too far off in terms of performance, because you're just following the market returns. But if you act like a smart aleck and think you are the next Warren Buffett and then pick your own stocks or ETF that are not following the market trend, then be prepared. High risk, high return, right? You have to actually take on the risk, and sometimes the risk is really not worth it for the returns. So I hope that my little update on my Syfe portfolio performance have give you a good overview of how Syfe works, and maybe you all can decide for your own strategy on how you all want to invest with Syfe, whether you all decide to start a portfolio with it or not. But if you all want to start a portfolio with Syfe, then remember to use my referral code, right? Just key in Honey Money in the promo box below so that you can get your first 30,000 actually managed for free. But if you don't want to use Syfe, that's also okay as well. But remember to use my referral link for Tiger Brokers or Mumu Brokers, because they are one of the lowest cost brokers actually in Singapore or in this region, right? And most importantly, you get your one free Apple stock, which is worth up to $200 SGD now. Also, if you have enjoyed my portfolio sharing, then do help me give a like at the bottom of the video. It just takes 1 second of your time, and consider subscribing to my channel for more personal finance and investing videos. Also, join us over at our Telegram community group at Honey Money SG over there, this link. And if you want to check out my previous Syfe performance update in November, then do remember to click on this video over here, because I will really go through with you the details and my thought process on doing all that stuff. My name is Christopher, this is Honey Money SG, steering young adults to financial independence.